a sense, in the eye of the storm. There is a lot of pressure, debt piling up, the moratoriums are still being extended, and especially for NBFCs, the big question is whether they can survive. I had the opportunity of catching up with Mr. Keki Mistry, who spoke on a host of issues. Do listening. I think there is not too much debate about whether we need to open up. Everyone says, yes, we do. The question is when. We've seen two phases of lockdown, close to 40 days, and now we have an extension of 2 weeks. Do you think we are now in a clearer position to at least know what happens after 17th May?
I think with every passing week, we are getting closer and closer to a situation where we will see a bigger opening up of the economy. So compared to where things were 2 weeks ago, there is more opening up of the economy. As you said, the green zone is open, orange zone some restriction, red zone also in bits there is some opening up. Excepting, of course, in certain locations, certain areas where the problem may be will be more compounded. So I think we just have to be a little patient. The government understands best what needs to be done. We have to keep two things into account. We should not get into a situation where we open up the economy very, very quickly or very before time, because if that means that 4 weeks or 6 weeks later we have to go into another lockdown, it would be a complete disaster. So I think a calibrated opening up of the economy is very important, very necessary. And I think the government is doing the right thing in doing this. In terms of casualties, in terms of number of cases coming up, I think the government would be much better equipped to understand what is going on than what we can see through public domain.
Having said that, Mr. Mistry, so far the guidelines which have come out from the central government have then been coupled with guidelines from individual state governments. Now, for businesses, what are the challenges right now? Do you have a clear picture on how work will look and the extent of how much you can function for the next 2 weeks?
Well, I think for the last 6 weeks, people have been working from home entirely, and very, very few of the offices have been kept open. And those offices also have been kept open in the last 2 weeks, and that includes very, very limited number of offices. So my sense is that now from Monday onwards, there'll be more offices that will get opened up. And then hopefully 2 weeks thereafter, when the lockdown, I think, will probably get lifted in a much bigger way, we will see more offices getting set up. So I think from a business standpoint, things will slowly come back to normalcy. It may take a little while for complete normalcy to come back, but I think that is expected under the circumstances. So long as we don't have another relapse of this situation coming up 6 weeks or 8 weeks later, that is something we have to be very watchful of. We've gone through this 6 weeks of difficulty, and I think another 2 weeks is not going to be can still be managed. But after that, we should not have any further, relapse of this issue coming.
How do we ensure that a balance is maintained between this cautious approach, which is also necessary, and reigniting economic activity? We're already seeing the side effects of a sustained slump in economic activity. Whether it is in terms of job losses, businesses getting hit. It would be difficult for the banking sector as well because debts might pile up. How do we ensure that there is some kind of a cushion there?
Look, my sense is if you have as much as 6 to 8 weeks of low activity or almost nil activity, then it's going to have some impact in terms of business going forward for some time. But India is a resilient economy. Our economy is entirely domestic. So at some point of time, notwithstanding what is happening in overseas markets where there might still be a more prolonged slowdown, my sense is that over the next 3 quarters, we will start seeing a reasonable degree of normalcy come back. And I would personally be very surprised if by the time we come to the end of this calendar year, we are not back to, let's say, 90-95% normalcy. I think the important thing at this point of time is to ensure that there is enough liquidity in the system. RBI has done a lot to do that, and I must thank RBI for ensuring that there is so much liquidity. The problem today is the risk averseness which has set in. there is a lot of risk averseness in the banking system, which is reflected in the fact that we are having so much money going back to being deposited with RBI in reverse repo. So my sense is that we probably need to do a couple of things. We have moved from a regulatory environment 5 years ago when things were relatively much easier, much slacker, to what we are today, where we are in an extremely tight regulatory environment, as we should be. But maybe the time has come now under these extremely difficult circumstances to ease things a little bit in the short term. My suggestion would be twofold. I think one is we have to first get rid of this risk factor. And this risk factor has come in because the level of NPLs that are being shown by banks today is so much higher than what was being shown, say, 4 or 5 years ago, because there is much tighter control, much tighter regulatory framework which is applicable. And because of that, the risk averseness has set in because people don't want to give a loan and then run the risk of NPLs going up. So I think in the short term, at least, two things with my suggestion would be we need to do two things. One is we need to probably change the NPL recognition period from 90 days to 180 days under these extremely difficult times that we are all facing. And the second suggestion that I would have is that there are certain sectors in the economy which have been badly impacted because of this whole COVID-19 and the period immediately before that. Industries like the hotel industry, aviation, real estate, and a few others. And these industries need to be given some kind of benefit. Now, these benefits may vary from industry to industry, but to my mind, the most important thing is the ability given to banks to restructure loans given to these sectors, restructure loans given to hotels, to real estate, to hospitality, to retail, and so on and so forth. And this should be given to both NBFCs as well as to banks. So if you have a two-pronged approach where you have a restructuring of loans that is allowed, and you have the classification of NPLs being changed from 90 to 180 days, then I think that will go a long way in giving confidence back to the banking system to become a little less risk averse. Even this restructuring of loans should be done in a very, very properly sort of manner. It should not be that anyone should be allowed to restructure every loan. There should be cash flows left in the project. One has to look at a properly board-approved policy. So it should be done under some degree of guidance. So these two things, if done, will go a long way in ensuring that liquidity flows to sectors in the economy which need it.
Let me also, get a sense on the moratorium. And now the 3-month moratorium that the RBI sort of said that banks could take forward and financial institutions could take forward has given some relief, perhaps. But considering the extension of the lockdown and that economic activity will be depressed for some time, do you think there is a case for the extension of the moratorium as well?
Well, I'm not very sure. My sense is if in the next 2 weeks the lockdown is lifted, as seems very, very likely at this point of time, then I don't think that may be necessary. If not, maybe an extension by a month or so is something which could be considered. See, you must understand that notwithstanding the ability to opt for a moratorium, there are not that many customers who opted for it. The number of customers who opted for it will vary from bank to bank and vary from the kind of product for which the loan has been taken. In most cases, my understanding is that the number of the value of loans where a moratorium has been sought is typically in the range of around 20% or lower than 20%, which means that nearly 80% of the customers, despite having the ability to delay making payments, are not opting for it. And I don't even think it's a good option for them. If you have the money, my sense is just continue to keep making the payments, because otherwise the interest will keep mounting. The interest mounts both for the lender as well as for the individual. So unless someone has lost his job or there is some very specific reason why he cannot pay, the moratorium, in my view, should not be available. And therefore, since 80% of the people have not sought the moratorium, their income has not probably been impacted. My sense is it's not such a major issue.
But Mr. Mistry, this was in the month of April. We have to yet see what unfolds in the month of May in terms of jobs and loss of income, etc. So in that sense, do you think there could be a case? And also, if I may ask you, what was the kind of response for the moratorium for HDFC?
Well, we are in a quiet period, so I can't comment on specific numbers. But as I told you, we would not be far away from where the average is. The average to the banking system, my understanding, is sub 20%.
Okay. And do you think that there would be a case if there is an extended, period of a slump in economic activity?
I don't think so. I think even if there is a period of extended economic, first of all, I don't think there'll be a period of very long extended lack of economic activity. My sense is in the next 2 weeks, we should get back to some degree of economic activity, if not, certainly not 100%. So job losses have not been as many as you may think there are. Job losses might be more in the daily work wage earners and people like that who are generally not borrowers of loans from banks or from NBFCs. Typically, the people who borrow money from banks and NBFCs are the middle income people. And most cases, barring maybe 1 or 2 sectors, in most cases, people have not lost jobs. There might be some salary cut or there might be some reduction in pay in some sectors. But by and large, that's not, so far, touch wood has not been such a big.
We'll take a very short break at this point, but when we come back, I'm going to be speaking to the World Health Organization representative for India, Dr. Henk, and I'm going to ask him about a lot of things we've been hearing. Does the BCG vaccine actually protect us? Does plasma therapy really work? Is there, some kind of a miracle drug around the corner? All of those questions answered after this very short break.